Hey everyone, how are you? How was your week? I took this NEQ short position on Friday, and in this video I'm going to break down the checklists I used for this setup, which are higher time frame key level, candle closure, sequential SMT, and draw on liquidity. So let's get into it. We are going to start our top-down analysis from the 4-hour chart. Here on the 4-hour chart, we do have a clear price action. After the 6 o'clock candle opened, NEQ took previous day high and YM failed to take previous day high, creating our first bearish sequential SMT. Also, NEQ took the previous candle's high, which is the 2 o'clock candle's high, and rejected to close above the previous candle's high, forming a candle to reversal closure. So on the 4-hour time frame, price took previous day high, which is our external liquidity, and also formed a 4-hour reversal candle to closure. So if you can confirm the bearish weekly sequential SMT and the 4-hour reversal candle to closure with lower time frame changing state of deliveries, our next draw liquidity is going to be interrange liquidity, which is the 4-hour fair value gap. To confirm our 4-hour candle to reversal closure, we are going to go to the 50-minute time frame. Here on the 50-minute time frame, we do have a second stage bearish sequential SMT, which is the daily sequential SMT. As you can see, NEQ took London's high and YM failed to take London's high, creating our second stage sequential SMT. We also had a 90-minute sequential SMT where NEQ took New York's Q2's high and AS failed to take New York's Q2 high, creating our third stage sequential SMT. So we had a 3-staged bearish sequential SMT with a 4-hour candle to reversal closure confirmed with 50-minute change in state of delivery. So we can say this setup have qualified every checklist I mentioned earlier. For this setup, our key level was external edge liquidity with SMT. NEQ took previous day high as external edge liquidity, and AS and YM failed to take previous day's high. For our higher time frame candle closure, as you can see, NEQ took previous candle's high and rejected to close above the previous candle's high, forming a 4-hour reversal candle to closure confirmed with a 50-minute change in state of delivery. The third checklist was a sequential SMT, and as you can see in this setup, we do have a 3-staged bearish sequential SMT confirmed with a higher time frame candle closure and a higher time frame key level. Our final checklist is draw liquidity, and we do have a clear draw liquidity since price took external edge liquidity, confirmed it with a 3-stage bearish sequential SMT and also a higher time frame candle to closure. Our next draw liquidity is going to be the internal edge liquidity. Price simply moved from the external edge liquidity to internal edge liquidity. So all of our checklists have been confirmed, which means we can expect price to go lower and fill the 4-hour fair value gap, which is our internal edge liquidity. So this was what the setup looked like, and I entered at the 50-minute change in state of delivery and put my stop loss at the protected swing high, and I targeted the first draw liquidity, which is London's low, but as you can see, price delivered to internal edge liquidities. So this was the trade I took on Friday. I hope this video was helpful. I will see you next week with a new setup and a new trade. See you next week.